Terry, the developments over the course of this past weekend maybe are not unexpected, but just how important are they to the economic story and perhaps even the market ripple effects?
Hey, good morning, Dom. The couple of things. One is I don't think that the tariffs decision in the lower court has much of an impact at all, and certainly no negative impact. What markets get out of this is a friend of mine who runs equity analysis at a very large bank calls it the wait and see attitude from markets all summer, whether it be the Middle East, the Alaska summit, whatever else. So this is another one of those things. So they'll wait and see, and that it will take months. Meanwhile, the tariffs will be in effect, and I was pleased to hear you and your first guest today talk about how so many fundamental analysts got it wrong on tariff impacts. So here we are with that. Should tariffs go away, there would be a large positive impact, right? I mean, if the economy did as well as it did with tariffs, you take that thumb off the scale, they'll do even better. So I think that's probably where markets are going to go on this.
Terry, it's interesting because that conversation that Drew Manis and I had earlier on this hour was about just how wrong some folks got it. And by the way, we're not singling them out. A lot of people thought things were going to be a lot worse given the policies that have happened, but have not come to fruition at all. Terry, you've been watching policy for a long time. Has it been a surprise to you that things have reacted as positively as they have, given what we have seen academically as being a real negative for tariff and tariff policies?
No, not really. And the only reason being is really two things. One is that the administration, after the original announcement in April, started calibrating its response. Some of this gets derisively called the taco business. And I don't think it's taco, because if you say you're going to put 100% on and you end up putting 30% tariffs on, people will say, well, he chickened out. Well, there's 30% more tariffs than there were, 6 months earlier. So that's not a chickening out. That's calculated. But no, I think the people make entirely too much out of the way that the Trump people do business, number one, and number two, I think they're anxious to virtue signal, frankly, and that gets in the way of understanding what's actually next.
Terry, I think most of the markets believe that when this is all settled, when things are done and dusted, if they ever can be, that it's going to be somewhere between the taco trade, which is the Trump always chickens out trade, versus the Waco trade, which is the world always chickens out trade. How exactly does this kind of play out in the coming months, and just how important are some of these discussions with regard to getting rid of tariffs between countries bilaterally going to be in terms of our economy?
Well, they're very important. And, I do think, Dom, that have been saying this for a while. I mean, my number one theme all year has been, on a macro sense, is that markets aren't internalizing as they should the threat of what I'll call a soft war instead of a cold war. But that's apparent everywhere. Besant calls it national security is economic security, and vice versa. The entire Trump economic program is designed, whether it be taxes, onshoring for manufacturing, what they call energy dominance, deregulation, so on, is all about making the U.S. economy as strong as possible, and frankly, to withstand China's effect or desire to destabilize our economy, among other things, through leaking products in. So we're in a situation where there is kind of an economic soft war going on and will for the foreseeable future. There's a lot of opportunity in that for markets if they understand what's next.